all day there on Capitol Hill. Eric.
Sure, thank you so much. As you say, Richard Shelby is the ranking Republican on the Senate Banking Committee. He delivered a very strong set of opening remarks, and as you pointed out, asked some tough questions of Mr. Dimon. Senator Shelby, welcome, and thank you for joining us. Senator Shelby, you went into this question wanting to know, wanting to know quite a lot out of Mr. Dimon, why the trades were made, why they produced losses, and to what extent Mr. Dimon and other J.P. Morgan executives were involved. Did you get the answers you wanted?
Not all the answers, but we had, I thought, a good performance by Jamie Dimon. I thought he was forthright. He was up to the questions that asked by all of us. But I want to know exactly what happened sequentially. We asked the comptroller that last week. Mr. Dimon, as I understand it, they still have a position there, so it's proprietary. And I think we will get our answers down the road. What I want to know, were they really managing risk? If they were, and, you know, that's one thing. If they were just trying to make money, that's another. And we understand that financial institutions take risks to make money.
You said in your opening remarks that you wanted to know whether the Chief Investment Office had contradictory mandates, and it sounds to me like that's what you're getting at right now. Jamie Dimon said that the synthetic credit position was a hedge against J.P. Morgan's naturally long position in credit. But at the same time, he told us that it had made J.P. Morgan billions of dollars over the past 3 years in what was broadly an improving credit environment, and also that the CIO, the Chief Investment Office, was supposed to increase profits. Does that sound like contradictory mandate to you?
Well, I think the business of a bank is to make money, to manage their risk, and so forth. I think that I'll withhold my decision on that until we see what the comptroller says and we find out more about the sequences of what went on.
Let's talk about the degree of involvement that Mr. Dimon himself and others at the bank had. Sherrod Brown, your colleague on the panel, asked him some specific questions in that regard, and Mr. Dimon responded that he was aware of the Chief Investment Office's trading strategy, but that he didn't approve it, and that he only generally monitored Ina Drew, the Chief Investment Officer, and her office. I wonder, quite honestly, and I'm more interested, frankly, in your opinion, whether that sounds like a CEO who has his hands on the controls.
Well, that's a good question. Does the CEO of any company or organization that large control every aspect of the business? The answer is obviously no. The question, how does it flow to him, and who ultimately makes the decisions? He obviously doesn't make the trading decisions. Somebody else does.
Yes.
But ultimately, he's the one that's responsible.
Reported to him.
Absolutely.
He said he trusted her, and clearly trusted her too much. How does that make you feel?
Well, I know a little about the background, just reading about it. This lady had worked for him for years and years and had made a lot of money for the bank. She also lost some money for the bank. He said that it was a bad conception that they had. It didn't work, and said he was sorry, and they're sorry to the tune of $2 billion or more.
Senator Shelby, you are a big proponent of capital adequacy. The bank should hold more in reserve against potential losses. You talked about it extensively in today's hearing. Jamie Dimon testified that he thought an 8% capital adequacy rule under the Basel III standards would be enough. What do you say to that? Is 8% enough to you, or does it need to be higher? Does it need to be the 9.5% or more that's being contemplated?
I know of no institution that's ever failed. It was well capitalized. I believe we ought to go to 10. Ultimately, it'll be up to the regulators. It'll be interesting to see what comes out of Basel III plus the big super banks. No substitute for capital.
But when Mr. Dimon says to you 8% is enough,
I disagree with him.
You disagree?
I disagree with him on that, but you have to give J.P. Morgan credit. They do have a lot of capital, and they've been well run in the past. I want them to be well run, and all banks to be well run in the future. I don't want the taxpayers to bail out anybody.
But to your point, J.P. Morgan has been a well-run institution, and notwithstanding this loss, still stands to make a lot of money this year. Who then are we implementing the 10%? If we implemented your 10% capital threshold, who would it be for if not for J.P. Morgan?
It would be to all the big banks. I think that under Basel III and also under the regulators of Dodd-Frank, that they're going to make the big banks have more capital. The bigger they are, the more capital they should have because there's risk there.
Senator Shelby, the last time the question of Glass-Steagall came up on the Senate floor, you said it might help to reintroduce Glass-Steagall, the historic Depression-era separation between investment banking and commercial banking. Looking at the banking landscape today, thinking about the testimony that we heard from Mr. Dimon this morning, do you still think it might help to reintroduce Glass-Steagall?
Well, you mean to pass legislation? I don't think that would happen. I voted against it because I thought we should separate investment banking from commercial banking.
Do you still believe that would be better?
I still believe it, but I don't think it'll happen.
What else can we do beyond Dodd-Frank and Volcker? And I'm not talking necessarily about more rules, but what can we do beyond those laws and the specific provisions of that rule to make the system safer?
Capital, capital, capital.
You like Basel III?
I do, and I like it even if it's a little higher. There are going to be a lot of banks, big banks, are going to die to make the capital. A lot of them are looking at the upcoming downgrade of banks. They're going to have to raise more capital. There's no substitute for capital.
All right, Richard Shelby, thank you so very much. The ranking member on the Senate Banking Committee, Richard Shelby, here with me in Washington. Trish, back to you in New York City.
All right, Eric.